My experience of the BIS, I am not a fan. When the BIS announces that actual gold allocated to your balance sheet is now recognized as a Tier 1 asset, what they really mean is that they don't like the US Treasury as much as they did last week, last year, or 10 years ago. Since they are aware that the current yield on a 10-year US Treasury note is at 4%, they are taking advantage of this fact. It is an obvious untruth, as all those on Wall Street are well aware. The 10-year yield is essentially a defaulting loan, which is a hidden secret. It's the risk-free return for holding Uncle Sam's holy IOU and promise to repay. After the 10-year, gold has joined the ranks of top-tier assets. In my opinion, the comparison is ridiculous because US tenure is significantly different now compared to even 20 or 30 years ago. I am not a bond market expert. This is not an IOU from my father. Nobody believes it anymore. Yet again, overextended, overarmed, and underinflated. A change in the way central banks manage their reserves sheds light on more fundamental shifts happening in the world's financial system. Even though the mainstream financial media tends to blame expected interest rate reduction for the recent spike in gold prices. Instead of just spreading their bets, central banks are doing more. They are setting themselves up for a possible shift in the monetary system. The inclusion of gold in conversations about official reserve management is becoming more common in the quarterly reports released by the Bank for International Settlements, which further supports this strategic shift. The revelation that global regulators are losing faith in US treasuries was just made public by the Bank of International Settlements. Classifying gold as a Tier 1 asset indicates they realize the 10-year yield is a negative return bet, according to global expert Matthew Piepenburg. A grave caution has been issued by the policy change. Piepenburg cautions in his view that banks intentionally ignored gold for decades due to its volatility, despite the fact that it has beaten the S&P 500 in actual terms. This happened on purpose. To put gold on the back burner and safeguard the dollar, the establishment used a compelling narrative. With the S&P 500 trailing behind gold's unrelenting advance in 2025, unpleasant comparisons to 2008 emerge, the last time the precious metal and equity markets had such a huge difference, and the subsequent events were far from pleasant. A single move destroyed the petrodollar that the US had established to safeguard its currency. The dollar's weaponization against Russia in 2022 marked a turning point that shattered global confidence, according to Matthew Piepenburg. He claims that at that moment, central banks bought more gold than ever before and dollarization accelerated. In 2022, the world began to see gold for what it really is, a more stable and secure investment than the increasingly troubled US currency and treasuries, according to Piepenburg. Ensure you never miss a moment when truth meets the market by hitting the subscribe button and tapping the bell symbol before we get into Matthew Piepenburg's keen insights from their most recent conversation. Then let's begin. The gradual melting of this beautiful ice cube of fiat currency has caused various problems in the system, including rust and cracks. I've been working with private wealth managers at banks X, Y, and Z for 25 years, and they've consistently told me and others that gold is too volatile to invest in, so we should stay in these categories. However, when we look back, we can choose our statistical window, but gold has actually outperformed the S&P in real terms. This asset has outperformed even the S&P bubble in the last 25 years, even when considering risk-adjusted returns and total return. Despite this, it is being criticized for being too volatile. Moreover, the idea that debt devalues currency was never addressed in graduate school or economics classes. It was never brought up, and I certainly didn't imply that it would in the RAIA Registered Investment Advisor industrial complex in the US or anywhere else, or in the PWM area where posh banks employ bright minds with advanced degrees, but alas, it never happened. In my opinion, gold's price volatility is too high. You might say it's an asset for a pawn store. I don't believe it was always willful deceit, but rather the harshness of your upbringing and the knowledge that diversification and judicious allocations provide the best protection. However, I believe it to be at a lower level, and I realize this may seem foolish. It seems to me that the political and educational establishments, as well as the banking system, have made a conscious decision to hoard gold for many years. It is now impossible for them to do so. There's no denying it. We will address that. But, as I've mentioned before, there were many excellent books written about the period when the United States abandoned the gold standard in 1971. One major worry was that whenever the president, the Fed chairman, Kissinger, and others would arrive at the White House for their mornings of global shaping, their first question upon entering would be, what is the price of gold? How much is gold now? The most important thing to remember is that a rise in gold prices is a warning indication that the dollar's confidence is eroding. That is, if its value on the DXY is lower than that of other currencies. Significant headline changes in gold are good for more than just gold investors and speculators. The world reserve currency, the underlying currency, is losing credibility, respect, and trust, according to that. This holds true even though Nixon assured the public in the 1970s that decoupling from gold would only be temporary. Now, 54 years later, we still haven't addressed the issue. B, that the purchasing power of your money will be unchanged from now to tomorrow. Two outright falsehoods. Amazing nonetheless, even when those are outright lies. The fact that the buying power of the US dollar relative to gold has decreased by more than 99% in those 54 years is just one of many undiscovered phenomena to emerge from the DC excess pool. That situation does not involve a gold bug. Because of their daily concerns about the US dollar's trustworthiness, they were wondering where gold was going to be priced, which is an indication that the currency is weakening. And ever since that anxious period, they've come up with new methods to generate demand for it. They created the petrodollar system and the OPEC nations to cover up the debasement of the currency. The dollar must now serve as the global benchmark for oil prices. Ingenious strategy to delay the inevitable depreciation of this currency. To increase demand for the dollar, they artificially increase the price of oil. The worldwide fast system for bank-to-bank payments relies on it as its key. Lending in US dollars is the norm even for non-US countries when dealing with US institutions. This is credit that is denominated in dollars. That is to say, they orchestrated this enormous, as Brent Johnson would put it, milkshake straw-sucking sound, where the demand for dollars is continually emanating from the global system. This is due to the fact that the dollar is the world reserve currency, which is an incredibly privilege. John Conley correctly identified the problem as our currency, and for a long time that worked. We made these fake sponges so that people all across the globe may soak up devalued currency. More importantly, we established the International Monetary Fund and the World Bank to provide South American countries, as well as other regions like Africa, with beneficial loans. So, to put it another way, we made sponges all over the place to soak up our squandered dollar. Great. Very well. Reasonable actual politics. After decades of floundering, we have struck a wall. Our currency is now our problem due to our extraordinarily high levels of debt. I mean, the United States had an $8 trillion national debt when I graduated from graduate school in 1995. There are now 37 trillion. Therefore, we have become excessively privileged. We are no longer believed in. Our level of debt has grown too high. There's been an excess of money printed. In addition to being haughty and usurist against the rest of the globe, including the BRICS nations, which are only now responding, and all those years of haughtiness, the IMF has admitted to being an economic hitman, which is similar to John Perkins's acknowledgement of the haughtiness, the Fed's and the World Bank's haughtiness. The cumulative sins of believing we could operate freely with our currency and monetary policies, including the haughtiness of JP Morgan and Goldman Sachs, as well as the bailouts, have now reached a point of near doom. When the United States frozen the foreign exchange reserves of a significant nuclear country in 2022, we effectively militarized the dollar and marked a turning point in the Cold War. No matter how small the amount, $350 to $400 billion, it was a turning point when the United States weaponized its neutral reserve currency. Not only did this make the United States an indebted issuer of the world's reserve currency, but it also made the rest of the world feel like it was dragging the United States monetary and inflation policies behind it. well, we've crossed the line now that we're threatening to freeze the dollar as a weapon, could be able to use this treasury as a weapon against more than simply Venezuela and Iran. Regardless of your opinion on Zelensky or Putin, we will pursue Russia, the R in BRICS, and are already in trade arrangements with China, the C in BRICS. The rest of the globe, whether they were friends or enemies of the US currency or were just unsure, thought, wow, if they can do it to Russia, a nuclear power, with that kind of chutzpah, they can do it to us all. So it was a huge blunder. That day marked the beginning of the acceleration of dollarization, which is no longer a theory but a fact. This development was not accidental. There has been a triple whammy in the last 3 years. Faster petrodollar sales, more innovative trading and currency arrangements, and most notably, faster gold stacking by central banks, especially those in the East. That was my conclusion. In 2014, I could have gotten a clue about gold, but by 2022, everyone else had figured it out. Once again, I penned an article. This is how the West was lost, and I'm not the only one. There were many more. In this way, the dollar remains a fixed unit of currency. Although it retains its status as a world reserve currency, its hegemony is diminished.